Hey guys, it's Mohammed from www.forexb.co, and today in this video we're going to talk about how you can find and trade the strong support and resistance zones. We're gonna define the resistance zone and we're gonna see what effect it has on the market, and we're also going to define the support level and how you can draw them and what effects does the support level have on the market. After doing that, we're gonna go toward the procedure or the method through which you can draw strong support and resistance zones and in the daily time frame, and we're gonna discuss how you can use those levels drawn in daily time frame to take your position and place your trade after looking at the price action near those zones. And at the end, we're going to go through a live example through which I'll be showing you live how you can use the support and resistance levels to take your positions and increase the probability of making your trade profitable. So without any delay, let's get towards the video. So first of all, let's define the resistance level. And as the word itself suggests, the resistance. And when we consider the literal meaning of resistance, it means to hinder something and to not something let something happen. So what resistance level does is when the price is going up, it stops the price from going up and it changes the direction of the market. So when the price is going up and when it reaches the resistance level, it will reverse the direction of the market and the bullish trend will continue to become the bearish trend after reaching the resistance level. And you might be wondering why it does that. So it does that because at resistance level there is more selling pressure and more supply. So whenever there is more supply, the market will start going bearish because not enough buyers are there willing to buy that currency. So the market will start behaving bearish. In the very similar manner, we can define the support level, and even when we look at the word support, just like resistance, the support suggests to support something and to not something go below certain level and to lift something up. So what happens is when the price is going downwards and when it reaches the support level, it will stop the price from going down further and it will reverse the direction. So a bearish trend after meeting the support level will continue to become the bullish, and the support level will hinder the price to go from going below its level. So it does that, it reverses the support level reverses the direction, because at support level there's always more buying pressure and there's always more demand than supply. So whenever there's more demand, the prices will go upward and the prices will start becoming bullish. Now let us look at the method through which you can draw very strong support and resistance levels in daily time frame. So what we need to do is we need to make our candles to a daily time frame, and the reason we use the daily time frame candle is that the engulfing candles always make strong level, and after spotting these engulfing candles, we can have idea about the forecast and we can draw strong resistance and support levels. And we need to look for bearish engulfing pattern in order to find the resistance level. And whenever we spot that bearish engulfing pattern, what we will do is in bearish engulfing pattern there will a bearish candle will be engulfing a bullish candle, and what we will do is we will draw a line at the high of the bullish candle, and we will also draw a line or horizontal line at the high of the bearish candle which is engulfing the bullish candle. So after drawing these two lines, the region that we get in between these horizontal lines is basically our resistance level, and this resistance level will always hinder the price and try to stop the price from going up further, and will reverse the direction whenever the price reaches this level. It will always try to keep the market below its level. It's not like it will always stop the price, but there's another benefit. Even if this region gets crossed and the price does cross that level, there's another benefit and another use of this region as well. So we need to go to daily time frame and look for bearish engulfing candle, and we need to draw our resistance level. After drawing, in order to take our position, what we need to do is we need to look for the price action near our resistance zone. So by price action, what I mean is we need to go into lower time frames, because right now we will be in daily time frame. So what we will need to do is we will go into lower time frames, which I recommend is you should go into 30 minutes or 45 minutes or 1 hour time frame, and we need to look for price action near our resistance zone, and we need to look for the bearish engulfing candle and also the pin bars. And here you can see a pin bar. After that, what we will do is we will open our trade, because whenever we support a pin bar near our resistance zone, it means that after the pin bar, the price, there's more supply and the sellers are in control. That's why the price will start going downward. Okay, so what we will do is we will open our trade and we will put our stop loss just above our resistance zone in order to cover the spread as well. So let's try to understand this through a live example. Now, without any further ado, let's try to understand this through a live example. So here I am in TradingView and I have opened up the AUD USD chart, and as you can see, here I am right now in 45 minutes time frame. So the first thing that we need to change is we need to change our time frame to a daily time frame, daily candles time frame. And after doing that, let me adjust the size of our candles so that they become more visible. So let me go towards here somewhere, and let me increase the size to increase the visibility. So what we need to do is we need to look for the patterns, and we need to spot a bearish engulfing pattern here. Wherever we find that pattern, we're gonna draw our zones in that level. So let me go here and let me zoom in a bit, and let's see. So here's one I have found. As you can see here, that this candle is totally engulfing this candle. So let me zoom in a little bit so that you can see clearly. So this candle is being engulfed by this bearish candle. Both candles are bearish, and this is valid for our analysis because this is basically a bearish engulfing candle. So what we'll need to do is we will need to draw a horizontal line at the high of this candle, and we will also need to draw a horizontal line at the higher of our candle which is being engulfed. So let me draw that, and there it goes. After that, let me color the areas to increase the visibility. So let me go here to rectangular tool and let me draw a rectangle here. So this zone is basically our resistance zone. So again, let me revise what I just did. I went into the daily time frame. I looked for a pattern that is bearish engulfing pattern, and at the highs of both the candles, which the engulfing candle and the candle which was being engulfed, I drew the horizontal lines, and the zone between these two lines is basically a strong resistance, because engulfing candles always give us strong levels or strong zones, and we can rely on the forecasting of the engulfing candles in daily time frame. So now in order to open a position, what I'll need to do is I'll need to go into a lower time frame, because right now we are in daily time frame. So let me go into 45-minute time frame, and let me spot our resistance level which we have just drawn. So let me go here and let me decrease the size. So right now here's the zone which we have just drawn, and let me increase the size of the candles. So as you can see, this proved out to be a pretty good resistance level, because it did not let price go through it in a very long time. So here, as you can see, it kept its resistance. And now what we can do is we need to look for the zones where the candles are touching the resistance zone. So this zone is basically here and here, and so let's look here, and here we will need to spot the engulfing candle again, the bearish engulfing candle, or a pin bar. So here we can see that this is a pin bar, and this is also touching our resistance zone. So this is basically price action happening in our resistance zone. So what we will need to do is we will need to open our position at this pin bar. So let me go ahead and take a position. So as I said in the beginning, that after touching the resistance, the price will always go bearish, and the trend will, because here you can see the trend is bullish, and after touching the resistance, it is supposed to go bearish, and that is what happened. So if we were here, and how would we place our trade is we will open a short position. So let me go ahead and open that. So click here, and we're gonna put our stop loss just above our resistance level, because we need to keep this margin, because we need to cover the spread as well. So here I will take this to our close. So basically our reward ratio in this is 0.98. Risk reward ratio in this case is 0.98, and I can increase that by moving our target down. So here we have opened a trade based on the price action happening near resistance level. Now let me show you a cool thing. Here we can use the Fibonacci analysis or Fibonacci indicator to increase our risk reward. So what I'll need to do is I'll need to get the Fibonacci retracement, and I'll draw that from here to the low of our candle, and here it is drawn. So let me increase that. So here we need to look for this number, the 0.618, and this is basically a golden ratio number. And if you know the basics of Fibonacci method and how it works, is basically this is the natural order of things, and all the natural things fall into this ratio. If you are not clear on the Fibonacci, please let me know in the comment, and I'll love to make a separate video on that. So for here, what you need to do is you need to start from the high of the pin bar and draw a Fibonacci to the low of our pin bar, and then look for this number 0.618. So what we need to do is we need to move our open position from here to 0.618, because this is our basically golden ratio number. And so as you can see here, we have increased our reward ratio, risk reward ratio. It has increased from 2.1 to almost 4.87 or 4.8. So this is how you can use the bearish engulfing candle to draw a strong resistance level in the daily time frame and open a position that has high probability of giving you a profit. Okay, let me show you another example, and let me just remove these two here. Let me remove this and these two as well. In order to draw another level, we need to go to resistance to the daily time frame again, and we need to look for the bearish engulfing candle. So here, let me increase the size of this, and here as we can see that this candle is being engulfed by this bearish engulfing candle. So we can do the similar thing here. We can draw our resistance level by drawing a line. So let me do that, and let me draw a straight line here, and let me draw another line at the high of this candle. And now let me color this area to increase the visibility. So this is basically another resistance level we have drawn. So again, in order to take any position, what we need to do is, after drawing our resistance level in daily time frame, we need to go into lower time frame, which I really like the 45-minute time frame. So let me go into 45-minute time frame, and let me find the zone which I have just drawn. So and we need to look for a pattern here that is either bearish engulfing or pin bar that is touching our zone. So actually what happened here is the price went through our resistance zone. So this resistance zone was broken by the price. Now I hope you remember in the beginning I said even if our resistance zone is crossed, it is still useful, because after the price crosses one zone, that is like if it crosses the resistance zone, after being crossed, this zone will start acting as our support zone. So let's see how strong this support zone was and how long it held. It was valid. So if we go here and look in here, so you can see this zone really did prove to be a good support level, because you can see the price touching this level and then bouncing up, and again touching this level, then bouncing up. So even after our resistance zone was crossed, it started to act as support zone for our next analysis. So in a similar manner, you can draw the support zone, but in support zone, what you need to do is in daily time frame, you need to look for bullish engulfing patterns. So let me find a bullish engulfing pattern somewhere here, and as you can see, this zone, this is basically a bullish engulfing pattern, because this candle is engulfing this bearish candle. And what we can do is we can draw our zone, our horizontal lines here, and then again draw one line here. Now this zone is basically our support zone, and in similar way, just as I showed you in our resistance zone, you can use this support zone to open the buy orders, because you want to take the long position near the support zone. So I hope this video made sense. If you have any questions, please comment down below and I would love to answer them. And please subscribe our channel in order to remain updated about our content, which we post regularly about price action trading and support and resistance, and a lot of the concepts that are required in Forex. You can also visit our website www.forexb.co to learn more about Forex and price action. See you in the next video. Thank you.